Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to look at how the USE minis unfolded yesterday, which was Thursday, October the 10th. As you can see, the market's gapped up, they then drifted up a bit, went sideways, and then had a nice strong rally up into here, into just after the 3 o'clock time. You'll notice that the on the 3-minute ES, which is what I'm looking at here, the STF was blue, therefore indicating the large degree trend was up. So this TS4 buy setup here was a standard MTPredictor trade setup. It had the same kind of setup on the NQ, and also had the same kind of setup on the YM. So all three USE minis gave lovely buy setups there just before that strong rally. One thing I'd like to look at now is, rather than just using the standard MTPredictor trade guidelines, where here you'd have come out at the first target, which would have been here because the STF was weak, and you'd have banked a 2.2 hour profit, which would have been very nice indeed. Was there any way that you could have anticipated that this was going to rally a little bit further? Well, this is where we can turn to the 15-minute charts. Here's a 15-minute chart of the ES. Actually, I'll just take that off because that's where I had on from yesterday. You'll see what we do on the 15-minute charts. We place our DPs on these charts. Now these are leading indicators, so they're on the chart before the market even opened. So you'll see that there was a consolidation along here. The market then came down, so we'd have been placing a DP resistance area off this high here. So you right mouse click, select DP, and there it is on the chart. Now the thing that I wanted to show you was how this DP was still above the ES as this TS4 buy setup came in. So I'll just go down to the 3-minute chart here, and here you can see it. So you can see here's the buy setup. The 15-minute resistance was still a little bit higher, and you can see that's what tagged the high of the day very nicely. So as you're in this trade, you could have said, well, hang on a second, I'd like the market to go a little bit further up into this higher resistance area, say into at least this particular area. Then as the market started to go through this, you could have done a simple technique of just trailing one stop below the bar lows, and that would have mean you'd have been stopped out just below that bar low there at about a 5.3 hour profit. That would have been a little bit of increase on your original 2.2 hour for the trade. So can you see what I've done there? Basically, I've taken the 15-minute target, which is what we had here, and use that on the 3-minute chart to try and adjust your 3-minute target. In other words, oops, sorry, wrong one there. Come back down to here. In other words, take our original target here and then take it up into the higher DP. If we do the same on the YM, here's the YM, here's the last major pivot point here, there's our DP target up there, and on the 15-minute NQ chart it never even reached there. It's never even reached this this DP level here. Long way to go. So on the NQ you could have done exactly the same technique of perhaps just letting it trail below the bar lows. Exactly the same thing on the YM, just trail below the bar lows, and actually on the YM would have been a lovely trade because you've got stopped out at about there for an approximately 8.2 hour profit, so that would have been really nice. This is obviously a nice technique to use, and very often when you get a market that runs away like this, bar after bar after bar, it's a good thing to do to lock in that kind of profit, because usually after this sort of run has sort of run out of steam, so to speak, you do tend to get consolidation as profits are taken. So if you do ever see this in your own trading, where suddenly the market goes bang 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 like this with you, it's always a good idea to perhaps just start to protect your profit with a trading stop one tick below the bar lows. If you're using NinjaTrader, this is very easy indeed, because if I just place our analysis on our NinjaTrader charts, if you're using our trade module, which is what we have here, what you can do with this, I'll just put the risk reward on up to there, which is where you've been stopped out. If you're using the trade module, which is what we have here, which basically allows you to place the trade in NinjaTrader really easy, because it places the entry levels, stop levels, and your position size as well. But what happens, or what you can do with this, is as the market starts to go with you, we have some tools here that you can use to adjust your trade management on the fly. So you can either close the position, bring it to break even, use our ATR stop, which is our red and blue dots, or this one here which says bar. It actually just trails at the bar low. So as the market's shooting up here, you just click on this button, then this trade management tool will automatically adjust your stop in NinjaTrader one tick below each bar as the bar completes. So in other words, it would have adjusted to here and then allowed you to lock in an 8.3 hour profit. So this is where the trade module NinjaTrader comes in very handy, particularly when a market zooms away like this, to be able to use our bar or one bar trailing stop as we call it here. So that's just a nice little thing for you NinjaTrader users with our MTPredictor trade module. But either way, it was a very, very good day for MTPredictor yesterday, because all three USE minis, the YM, ES and NQ, all had TS4 buy setups just before this strong rally coming up into late afternoon. So whichever way you're looking to manage this, you should have had some profits there as the market rallied.